Pleasure.
What are you trying to achieve with these biannual reports? What sort of things are you looking at?
We are looking at the trends in the South African economy, but we are also looking at the longer-term structural challenges that the country is facing. For example, in the first issue, we look at the challenge of raising the savings and investment performance in South Africa.
Yeah. I mean, let's talk about that, because obviously local savings does prompt local investment and just creates a more dynamic pension fund environment. And it's the one thing that's been lamented by Trevor Manuel as finance minister, by Pravin Gordhan. They talk about it, but we're just not responsive. Why is that?
Well, one thing we find being a challenge on the savings performance is the unemployment rate.
Yeah.
When people are unemployed, when they don't have jobs, when the dependency ratios are high, then the savings tend to be low. So we feel that, and at the household level, that seems to be a constraint in terms of savings.
Some would say, you know, if you looked at the Gini coefficient in South Africa and the huge inequalities that exist, that's also one of the problems that we're facing. It's not just that people are unemployed, but it's the fact that those who are employed have to carry so many other people within their social network who are not employed. And so it makes it really difficult to advance a savings case. If with my salary I have to send my brother to school, my cousin to school, take care of my grandmother, and so on and so forth. That seems to be a real problem in the country.
Absolutely, and inequality, unemployment, these are two sides of the same coin. But we also point out in the report that actually this is a time of opportunity in terms of savings. South Africa, in fact, has been seeing favorable demographic transition in the last 15, 20 years, where the young dependency ratio, those who are under the age of 15 relying on working age population, has been shrinking very fast. That in other countries has translated into different outcomes, more savings, more growth. We haven't seen that happen yet because of high unemployment.
Right. We also have the problem of sluggish growth. I mean, growth for 2011 at best will come in at 3.2%. The government insists, you know, to really create jobs meaningfully, this economy has to be pushing 6 to 7%, but that seems really far off.
That seems far off. There will be a big push that will need to come to raise it to 6 to 7% because we haven't seen it yet. And one of the key areas where attention will have to be given, of course, is to lift the investment and saving rates that we see so far. What we have seen in other countries across the world, which have been able to maintain the momentum on 6 to 7% growth for a long period of time, has been that their savings and investment rates have been in excess of 25%, which is quite a way off from where we are in South Africa. But again, the message is optimistic from our side, also on the investment side, because what our report shows is that the investors are facing fairly competitive rates of return in South Africa.
Yeah, and of course, I mean, savings will also be prompted by the interest rate cycle, which is meant to turn at least by the end of this year and next year. Do you think policymakers have the right kind of approach?
I think so, but as I said, I mean, you know, there are no easy solutions here. If unemployment or youth unemployment is one of the key constraints to savings, then it's easier said than done. Then a policy framework has to be much more holistic. And again, jump-starting economic growth will be very important.
What about proposals that have been made, and they're just proposals where, for instance, there must be a compulsory levy or tax that's going into some sort of a national savings scheme? I mean, a lot of proposals have been mooted from the previous administration. Sure. Would that work? Lessons we can learn from other countries, maybe?
I'm not particularly aware of the proposal that you are referring to, but what we have seen is that any tax incentive schemes or any tax schemes that the government puts in to raise the savings tend not to work very well. Okay. What does work is government savings coming from the expenditure side, and there we know that there's a very robust program by National Treasury over the next 2 or 3 years to do that, and that is going to produce some higher savings.
Foreign direct investment, that's also seen as a huge catalyst to drawing in investment and economic activity in the country, but we're told that post-credit crisis the FDI rate has dropped somewhere between 60 to 70%.
I think that may be because we saw a spike a couple of years ago, but overall the longer term trends in FDI in South Africa have not been very high. And that is a little bit surprising because, as I mentioned, the returns on offer in South Africa to investors, and these are not portfolio or equity investors, these are long-term investors, have been pretty high. They've been increasing over time, they are high, and they're globally competitive. And we should see a much more enthusiastic response from investors.
On the fiscal side, I mean, you said that we would see savings if we were to look at it from the government expenditure side. We know that government's going to be spending a lot. A major infrastructure build program. They're trying to incentivize business to create more jobs, especially in labor-intensive industries like manufacturing. So you're going to see a more active government. Is that necessarily a bad thing when we consider the debt to GDP ratio in the country? Should the government just be bleeding money like that?
Well, the expenditures actually you mentioned are all growth promoting. So that's not bleeding money, that is good expenditure. And the government has a program that it's put in place for the medium term where it will start rolling back some of these expenditures. So to the extent they promote growth and we see the program play out, I think it's a good thing. And South Africa's debt to GDP ratio, in fact, by global standards, is very low. So I wouldn't be very concerned about that.
What can we do as citizens? And I'm not asking you to prescribe, but obviously the government's also saying, business, come to the party. You need to be creating the jobs. We're just the enablers. We need to be promoting SME developments. Banks, loosen up those taps. Let's see credit flowing.
Sure. Well, again, I'll go back to the environment that the investors face here. Investors look at two things. They look at returns and they look at risk. South Africa is a fantastic place to do business. That's what our results are showing. There is a lot of money to be made here. Returns are high. So, of course, the focus has to shift on the risk side to make it more predictable for investors to come in and invest in South Africa and create jobs.